We're still looking at, actually now at a mixed picture. You got the Dow just below the flat line. You got the S&P and the NASDAQ pushing to the upside. The movement here coming after inflation cooled more than expected during the month of June. But is the reading even more important to the Fed at this juncture? And what ultimately does that mean here for Fed Chair Powell's path here moving forward? For that, we want to bring in Callie Cox. She is Ritholtz Wealth Management Chief Market Strategist. Callie, congratulations on the new job. Great to have you back here on Yahoo Finance. So talk to us just about how you're looking at this report and also what the muted maybe reaction in the equities market, what that signals to us.
First of all, thank you. I'm so excited to be representing Ritholtz. It's an amazing firm. And, more excitedly, we got another CPI report that points to celebratory rate cuts, potentially in September. What we saw today was basically inflation coming down, but not too quickly. And that's exactly what the Fed wants to see, especially as weakness creeps up in the job market.
How many more reports like this does the Fed need to see, Callie?
Well, that's the big question. Powell won't tell us, and that's kind of his MO. He doesn't give us, hard numbers or projections. But they do have 2 PCE reports and 2 CPI reports before the September meeting. So a July rate cut is probably too quick, but I'd expect to see Powell prompt us, really hint toward the potential for a rate hike through a rate cut through changed language in July.
Callie, if we were to see rates lowered, what do you think that could tell us about participation? Could we see more participation as a result?
Well, I think rate hikes have restrained this bull market so far, and rates coming down, with this economic backdrop, we probably won't see rates come down too much, but just a little bit of relief on the bull market could let it live a little bit more. We could see stocks outside of tech actually participate in this bull market, and the small caps and mid caps, which have lagged for so long, could potentially catch up.
And so with that in mind, where are some of the other areas, even as we're trying to wait for the catch up from small caps and mid caps, if there was an overflow from some of the rotation perhaps that takes place out of the AI trade and into other sectors, what are the sectors that are most ripe for getting some of that windfall?
Well, I think you have to look at the rate sensitive sectors, right? You're seeing housing. I know Jared mentioned a minute ago that banks are seeing a bid this morning. You have to think about those sectors that have been pummeled for so long from higher rates. And, if you think about who I'm serving right now, we have longer term clients. They're looking over years. And what we've been telling them is that there's a lot of value in this market, in those sectors that have been hammered by higher rates and aren't necessarily damaged for the long term. If you have some time on your side, this might be a good entry point, especially as, the rest of the market starts to breathe.
Callie, there's been so much talk about the concentration within the market, the need for broader participation, how much is riding on a handful of tech stocks, especially this earnings season. How are you looking at that and how big of a risk maybe this poses? Does it pose a risk to the broader market, do you think?
Well, we need to see earnings follow through. Of course, one of the reasons why tech has been so favored recently is because it has been one of a few sectors driving this earnings recovery. And to a certain extent, market concentration is natural. Usually people invest in what's doing well, and tech has been doing exceptionally well recently. But as this earnings season comes upon us on Friday, as we see a little bit of broadening, we need to see the fundamentals, show a case for the rest of the market outperforming.
Callie, as we're kind of beginning this second quarter earnings season here, what do you expect the outsized theme that we may hear from companies might be?
Well, I'm interested in hearing about, this is always the case, but I'm interested in hearing the commentary from management. I think the results matter a little bit more this time around because, like I said, we need to see a little more success in companies outside of tech actually, posting sales beats, posting earnings beats, but more importantly, sales beats. And, when I'm thinking about management commentary, I want to hear what management teams are thinking about the future, but especially when it comes to CapEx and plans to expand and, what they expect from the rate environment. More of that talk that you'd expect in bull markets that we haven't really gotten yet.
Callie Cox, Ritholtz Wealth Management, Chief Market Strategist. Callie, great to see you again. Thanks so much for hopping on.
Thanks for having me.